Hello, everybody, and welcome to the third and final lecture on financial accounting tools for NPOs. I hope you've been enjoying this series of lectures up to now, and hope you've learned some important or gained some important insights into the process of selecting a financial management accounting tool. So just to recap what we've been discussing previously, we started off with a basic explanation of the accounting equation, and we said that in order to understand which accounting package to select, you need to understand at a basic level the flow of transactions within the accounting system. So we said that your assets, which is everything you own, is effectively always equal to your liabilities plus equity, which is in essence everything you owe. So we then use that as a foundation to say the next step is to identify the features that you would need within an accounting software package. And so we looked at a number of popular packages out there. We looked at Wave, which we said was one of the free accounting software packages and ideal for smaller organizations and smaller NPOs. We then spoke about FreshBooks and Xero, which we said which is slightly more on the costly side, but still very useful for small to medium-sized enterprises. And then lastly, we spoke about QuickBooks, which is one of the most popular accounting software packages out there. And suitable for medium to large organizations as well. So we went through some of the advantages and disadvantages of each of the systems, and what we'll be doing today is looking at one of those systems in a little bit more detail. So what we'll be doing during the course of this lecture is looking at how to get started in an accounting software package. So we're basically going to go through 8 easy steps of how to get going with an accounting package, and this will give you a starting point on navigating through your journey of using accounting software in practice. So let's start off with step 1. In most accounting software packages, you'll be able to set up your branding within the accounting package. So when we speak about branding, your invoices, your credit notes, your receipts, etc., will have your document, will have your logos, it will have your color schemes, and it will look like a personalized document rather than a generic invoice from a generic software package. So very important that from a marketing perspective, this ties in with your entire look and feel of your organization. And this is the easiest part of getting started. So your first step is to make sure that you've got a good high quality logo, which you can use to then import into your accounting package. This will of course create a personalized, a professional look for your business, and this look will feature through all of your documents as well. I think what's important is to make sure that your logo is in high res, and that you've got a fairly good idea of what your brand identity looks like in terms of colors and fonts. So once you've got your look and feel under control, we then move over into the accounting side of things. So your next step is to connect your bank accounts. So it's important to note that by synchronizing your bank accounts with your software, the major advantage that comes is that this will allow automatic importing of transactions as they occur, and this will save you a lot of time because it negates the need to do manual inputs of all of your transactions. So when we speak about connecting your bank account, you basically using your username and password from your online banking. You're entering it into the software, and your bank account is now connected in a secure fashion to your accounting software package. So as transactions take place in your bank account, the same transactions appear automatically within your accounting system. And so that saves you the time of manually entering these transactions, and only requires you to then categorize or match the type of transaction to the account balance. So for example, all of your inputs will come through, and all of your inflows will come through, and you would just then need to categorize and say that this relates to sales, or it relates to donors, or it relates to grants, whatever it may be. And so that saves you a massive amount of time, which of course saves you costs as well. Remember that if you are using bank statements as your main source of accounting information, which is usually the case when you're dealing with organizations that are largely cash-based, this will definitely save you a lot of time. So consider whether most of your transactions in your organization is cash-based. The alternative to cash-based transactions are, of course, credit-based transactions. So are you raising or receiving confirmations of inflows where the cash only flows in much later on. And when I speak about much later on, I would say beyond 4 to 6 weeks, where you need to raise these creditors and debtors. Consider that if you are using your bank statement as your main source of accounting information, where most of your transactions flow through on a cash basis, then I would say this is a very, very useful tool to make you save you time and resources. Your next step is then to list your products and services. So when listing your products and services, you are effectively creating an inventory listing. Remember that your inventory listing within your accounting software package on a system like Wave doesn't allow for inventory management. So at this point, you're not entering in the quantities of the different items that you have in stock, but you're merely listing them so that you can quickly access them when drawing up invoices or drawing up quotations. With more advanced software packages like QuickBooks, you would then also input all of your quantities as well. So as you generate invoices and as you generate sales, the updated number of items happens automatically. And so your inventory management is then synchronized along with your accounting information as well. The next step is to list your customers and donors. So once again, this creates a listing of all of your donors, or if you have a mix between customers and donors, then you would put them all into a listing. Once again, this is very similar to step 3, where the value comes in when drawing up your estimates and drawing up your quotations, as well as your invoices. You're not constantly importing all of the details of the customer, such as name, phone numbers, contact details, addresses, etc. It's already preloaded into the system, and when you're generating invoices, it imports all of that information automatically. Remember that, of course, this is just your starting point, so you would put in most of your donors and your customers in at this point, but you always have the option of manually adding in customers later on as your business or organization grows. So really, this is not a once-off thing. It just saves you a lot of time and effort if you're dealing with certain major customers or donors. All right, your next step is then to set your VAT rate. So in South Africa, VAT is, of course, at 15%. It's recommended that you integrate your VAT settings upfront so that you don't manually have to input VAT on every transaction. Remember, from an NPO perspective, it's recommended that you chat either to your accountant or finance consultant on your VAT status, as different rules apply to NPOs. For regular businesses, the regular threshold for registering for VAT is a revenue amount of 50,000 Rand per annum. So if you're generating more than 50,000 Rand per annum, then you can register for VAT on a voluntary basis. If you are generating more than 1 million Rand per annum, then you have to register for VAT on a compulsory basis, meaning that you don't have a choice. You have to register for VAT. And of course, with that comes the administration of preparing your VAT returns and issuing them each cycle. And depending on whether you have a balance to pay over to SARS or whether you are entitled to a refund, you need to go through the process of preparing all of the necessary documentation and issuing it in a timely manner. So just as a word of advice, chat to your accounting team or your finance consultant and make sure that you are properly registered for VAT if need be, and if you are exempt from VAT, then make sure all of your documentation is in place to substantiate that if you are ever queried for VAT purposes. Your next two steps, step 6 and 7, is centered around setting up and testing your online payments. So with most accounting packages, you are enabled with an online payment portal, which is, for all intents and purposes, very similar to your payment portal on an online store. So the advantage here is that you set up an online payment portal. So when you send out invoices to donors or customers, the payments that they make goes directly through the system and is automatically updated in your transaction listing. So this saves you the time of going in and adding manually all of the payments that take place. Also, with your bank statement, you may have the risk of duplication of payments. So just make sure that if you are accounting for your receipts automatically through the online payment portal, then you are not accounting for an additional payment through your bank statement. So just make sure that you are not duplicating transactions. What's also useful with this feature is you are able to generate payments in real time as opposed to waiting for transactions to clear. Step 7, which is part of the same theme, requires you to go and test your online payment system. So there could always be some sort of a glitch or a problem where certain elements are not properly set up, or certain payment methods are not accepted. So you want to go in and just make sure that the payment system is set up and working correctly. So that's step 6 and 7. Step 8, which is the last step in the setting up process, is to import all of your opening balances. So if you are transitioning away from one system to another system, you're going to have to bring in all of your accounting balances from your previous trial balance. So your trial balance from your previous accounting system, which is effectively a listing of all your line items, all of your transaction accounts. So things like machinery, land, buildings, creditors, debtors, etc. You're going to bring in those balances into your new accounting system, and from that point, all of the transactions that take place will then add on to those transactions within your new accounting system. So this can become a bit of a complicated process if you have a large volume of complex transactions and sub accounts and sub balances. So I would recommend consulting with a professional accountant to help you with this transition. There are a lot of nifty, quick ways to do this, which your accountant will know about. So even if your old system is a manual system or in Excel, or not necessarily in a specialist accounting system, there are a lot of tips and tricks that you can use to do this efficiently and quickly, which will perhaps even save you a lot of time and costs if you opt to do this yourself. So what's next? You've set up your new accounting system and you're ready to go. The next step from an accounting perspective is to start developing your standard operating procedures, or your SOPs. So if you don't have a dedicated accounting function with experience in financial management, and you're setting this up for the first time, once again, I would recommend that you either chat to an accountant or you chat to somebody in an organization like ours, where we assist with these sort of processes. The idea is then to start setting up SOPs for your daily processes, your weekly processes, your monthly processes, and of course your year-end processes. And the value here is that you have a set number of tasks that somebody is responsible for. It's useful for onboarding as well if you're going to hire someone to do your financial management. And it also gives you insights into the processes that you need to follow in order to monitor and track your financial movements on a regular basis. So for example, there are certain things that need to be done daily. So, for instance, capturing your receipts, capturing your invoices, uploading photos of your receipts and into the system so that you have a document trail. On a weekly basis, you want to have certain things done, such as recording payments for bills that were issued in previous months. You want to do your payroll reviews and make sure that your employees are getting paid. Some of them get paid on a weekly basis rather than a monthly basis, so you want to make sure that all your payments take place regularly. Your aged receivables, meaning the money that's owed to you on a credit basis, you want to make sure that you're monitoring this and that people are paying you on time. And if they're not paying you on time, it gives you the ability to then follow up and make sure that payments are taking place in a timely manner. You have certain monthly processes, largely centered around analyzing your income statement and your balance sheet, making sure you understand what sort of inflows are taking place within the business, what sort of outflows are taking place. You also want to calculate some basic ratios to make sure you have enough money to meet all of your cash commitments. You want to also do certain calculations such as your break-even sales, so that you understand, what is the break-even point for me in terms of sales for me to be able to cover all of my expenses. Similarly, within an NPO context, you want to know how much of cash to keep on hand so that you can meet all of your commitments on a regular basis. This would typically be salaries and wages. You want to make sure that people are getting paid on time and that you have enough cash for those payments. And with that, there are a lot of other processes that you want to start developing to make sure that whoever is looking after your finance function, they're doing so in a systematic way that can be easily monitored and managed from a top level. And so that brings us to the end of this module on financial management accounting tools. To recap, we looked at the accounting equation and got a basic understanding of the accounting process. We looked at some of the features that you should be considering within the context of your organization before you select an accounting package. We then looked at the different accounting packages that are out there with a focus on just 4 of the most popular ones. We looked at some of the advantages and disadvantages and factors that can help you understand and assess which one to select and move forward with. And then lastly, we looked at some of the setting up processes that you want to be conscious of when transitioning or when using a new accounting software package. And then we gave you some insights into setting up your standard operating procedures or SOPs as far as your daily, weekly, and monthly financial management is concerned. So this is a brief introduction, basically a set of 3 lectures that you can use to start thinking about the core elements of framing your financial management and accounting journey. This allows you to then go into a lot more detail and a lot more depth when eventually selecting your package and setting up your processes for good financial management within your organization. With that, I'd like to say thank you very much. It's been a great joy to share with you this knowledge over the last 3 lectures, and I look forward to the Q&A section that will be coming up, I'm guessing in a couple of days. So thank you very much once again, and all the best.